What's going on, guys? Welcome back to the Marky Makers ICT Bootcamp. It's been a while since I uploaded a video here. I just got caught up. I'm doing 2 daily live streams, and aside from that, I'm posting a bunch of recaps and doing some one-on-one calls. So I've been busy, but I'm back. I found a little groove so I can make some content for you guys and start this bootcamp series back up, because I want it to be from start to finish. When somebody finds my YouTube channel, I can say, watch this bootcamp. If you watch this bootcamp, if you get through it, you will be profitable. You'll understand exactly what you're doing. So in the last episode, from what I was watching, it was about psychology versus probability. So learning about how you can make a higher probability with the actions that you take psychologically, and what are the things that hold you back. So I was talking about like some of the emotional mistakes that traders make. So going into this episode, I want to get back into the actual concepts, get back into the actual price action. So we're going to be in the charts in this specific episode, and I'm going to be starting with one of the favorite concepts out there, which is the no wick candle. So first of all, I'm going to teach you guys exactly why this is important, and then we're going to get into how you can actually formulate a model using the concepts that I'm going to be teaching. So without further ado say, let's get straight into the charts. All right, so just a reminder for any new traders, I primarily focus on gold. However, the concepts that I'm teaching, just so you guys don't step away, get confused, it doesn't just apply to gold, it applies to every single market. And before I get into this episode, let me just run you through the indicators that I use. Again, the most important ones that you want to also add as a beginner is going to be higher time frame power of 3. This shows the daily candle in the lower time frame, fair value gaps and IFEGs, this indicator right here. And then you can also turn on the ICT kill zones, which shows you the exact time that you're going to be trading at. So with that being said, let's hop into the chart. And the first thing that you'll notice, I'm on the 1 hour time frame. Again, time frame doesn't matter. It's universal for all of these concepts. They'll work from the 1 minute time frame all the way up to the yearly time frame if you're looking at it every once in a while, right? So just to clean up the charts and start fresh, the first thing I want you guys to pay attention is wicks. So what is a wick, first of all, for complete beginners? The wicks are the things above the candle. So like imagine a real life candle. You have a wick, that's what you actually light on fire. So every single candle has a wick, and the bottom would technically be called a tail, but I just call it a wick, bottom wick, top wick. So these wicks, you'll notice that every single candle has a wick. However, there are certain situations where a candle will open without one of these wicks. And this right here is actually a pretty significant thing. Whenever a candle opens without a wick, such as this daily candle, which opened and just expanded up, which is a perfect example for us because market just opened 20 minutes ago. We opened without a wick on the bottom. This right away, like you want to zoom in and actually make sure there's no wick, because sometimes you just won't see it. But you can see clearly right here, we opened the daily range without a wick. Let's go to the daily time frame. You'll notice every single daily candle has a wick. So whenever a candle opens without a wick, this could be a target for you. And you're obviously like not going to catch that big of a trade if it's right next to it. But let's imagine it opens, expands up, and it still doesn't have a wick. You will know that it's most likely going to come back down to create a wick, even if it wants to go higher. So this is what I actually use for a majority of my entries. First of all, as a target, and second of all, as a continuation. So let's say it doesn't have a wick, but I know that it wants to go up. It comes back down to make a wick. And from this area, I'm already looking for long confirmation, expecting price to continue from where it actually came from. So no wick candles are a very significant imbalance on the charts. So let's just look through some other time frames and see if we can find some no wick candles. Most of the time, you're not going to be able to find it because it almost never actually makes a no wick. You can see right here on the 30-minute time frame, we created a no wick candle right here. We expanded down, and right away, the market from the next candle is already trying to push back up to take out this wick. You can see we took it out in this candle and got a big retracement. So if the daily narrative is, for example, bullish, then it will go down, make a wick, continue higher. If it's bearish, it'll go up, take out the wick, and then continue back down. So that is typically how I approach no wicks, and I add them as an additional confluence. I also, in most of my trades, identify the first no wick candle. Like let's imagine there's a no wick slightly below. I wait for price after I enter to go to this area, and that's always where I go break even on my positions. That's because at this point, it's a significant area that price can actually reverse from. So let's say I enter my position down here. When it goes up into this area, I want to go break even on my position, maybe even take some profits off of the table, because I know that from areas like this, it will typically start to reverse. Now, I did cover in the start of these bootcamp episodes fair value gaps and IFEGs, such as the other concepts out there as well that I use. But we're going to start going deeper into the concepts, deeper into how you can actually use them, understand them. And there's a lot of different ways of using the no wick candle. So just so I don't have to like scour through the charts and look for different examples, I'm just going to show you guys the different examples here, imagining that there is a candle. So here's the candle. Let's imagine it opens without a wick. Like I said, there are multiple different ways to trade this. And my favorite is when it happens on the higher time frame. What I mean by that is, let's say the 4 hour, that's significant. The daily, the weekly is really significant. But also the 1 hour gives you enough time, and even the 30-minute. So whenever these time frames right here open without a wick, that is going to be great for you, because when it opens without a wick, this means you can target the wick inside of the range. So not just waiting for the candle to obviously close and then targeting it from the next candle or from some confirmation. But let's imagine the 4 hour candle. It opens without a wick, right away expands within the first, like, let's say 30 minutes. 30 minutes is up here. So if it's a 4 hour candle, we would still have up here 3 hours and 30 minutes of this candle before it closes. So once you start seeing that it starts to push back down, you can look for lower time frame confirmation and actually use this current no wick even before the candle closes, expecting the candle to start pulling back down, creating a wick on top, and going all the way back down just to create a bottom wick right there. Goes down, creates the bottom wick as it's bearish, and then let's say it still wants to go higher, it'll go back up. But now it has a wick, so now there's no point for it to come back down. This is also how I know if I'm in a trade and there's a wick, no wick above me, I don't want to be taking that trade. So let's imagine my setup is like it's running down, it's giving me the confirmation. However, right above my entry right here is a no wick. And I'm looking for a trade right here, like a bearish trade off of this area. I'm looking for a price to close below. It gave me an IFEG. I'm looking for an entry somewhere here. But then I realized there's a no wick right above. I would actually avoid this trade, because most of the time it will just completely disrespect any zones to take out the no wick, and then it will continue lower. So if I see a no wick, most cases, like literally 90% of the time, I'm not taking a trade. I'm waiting for it to take out the no wick first and then give me the reaction that I was looking for. And then I'll enter in this second move back down. Does that make sense, guys? So no wicks are going to tell you when you probably shouldn't be hopping in a trade. No wicks are also going to tell you where you should aim for a trade. Let's say you're bullish. This is the first target that you would be aiming for. So you get the bullish FEG, bullish IFEG, and you're looking for a trade. You're going to target this no wick. Or if, let's say, there's some highs up here that you want to take out, you're going to enter your trade. And by the time it gets up into this no wick, you're taking profits. You're going break even. You're taking money off the table. You're making sure you're risk free for the rest of the trade, because it could already reverse from this area before continuing back up. Does that make sense? Significant areas like this, no wick is another tool that you're going to add to your toolbox. So I want you guys to actually put some time into learning this concept, looking at it on the charts. Again, it applies to every single time frame. However, the higher time frame, the more time you actually have to act on the... Yeah, so take a look at that. So we had a bullish expansion. We came down just to make a wick, and now we're continuing back up. And this is the daily candle. So I'm telling you guys, it's a significant concept. Whenever you see something without a wick, it will almost always go. Like if it wants to go down, it will come back up just to take out the wick before continuing higher. And there are certain candles where it looks like it has no wick, but you really have to zoom in and make sure, because if it does, like look at this candle, it's a very tiny wick. You zoom in, you'll see that it has a wick. That already completely changes the story. However, when there is like surely no wick, it's going to be a target for price to go back into that area. So that's a concept that I want you guys to start paying attention to. And again, do your homework, mark it out on your charts. Another significant thing about this concept that I noticed is there are different brokers obviously out there. The concepts that I learned are taught by this guy called ICT, and he actually recommended using the forex.com chart. I've used them ever since. So when you're searching up gold or any of your other pairs, you want to make sure that you're using the forex.com pair, because this is the official forex pair. And this is where I see the no wicks, because some other brokers I'll go over to, like where I'm trading on, where I'm executing on, or even other brokers on TradingView, and they will not show the exact no wick. So use the forex.com charts. It'll be the clearest, and it will actually show you the no wick candle, versus other brokers aren't going to show you it as clearly. So make sure, even if you're trading NAS, you search up NAS 100, it has a forex.com version. Any pair does have one. So use that when you're marking the charts out. I execute on a different platform, but I still always mark out my charts on TradingView. So that's a significant thing. Now, in terms of creating a model out of this, like I said, first things first, like if the candle opens without a wick, it starts to expand. You can either look for it to go back down and you take a sell trade to take out the no wick, or again, you wait for it to create the wick And then when it creates the wick, you look for the daily target. So let's imagine it barely missed the daily target. It's just slightly higher over here. And this is the target that you're aiming for, right? Before you start looking for sells. So when price starts to go back down, my entry model would be first wait for it to take out and create a wick. And then once it starts to reverse from this area, what I look for is a lower time frame liquidity sweep, an IFEG. And why I'm looking for an IFEG is because on the way down, you're not trying to catch a falling knife. A falling knife, like trying to catch it, is like, imagine if you drop a knife in the kitchen and you're trying to catch the knife as it's falling, you will cut yourself. But if you just wait for it to hit the floor, you'll be able to pick it up gently and it's not going to hurt you, right? Same thing in the market. There is a floor. There is a point where the market stops and it starts to reverse. When it starts to reverse, this is when you're going to try to pick up that knife, right? That falling knife. And you will look for confirmation, the floor. I look for the bearish gaps that form on the way down to get disrespected. I look for this on the lower time frames. So oftentimes we will be getting a previous low. It will get taken out. That's a liquidity sweep. You get the market structure shift from your IFEG and you're hopping in your trade right there, targeting the daily gap. So if you guys have joined any of my streams, because I go live every single day, you guys will see I catch like 100 to 300 pip moves every single day because I'm looking for the daily range. It's unlike when you're joining anybody else's streams because I'm not just looking for a quick little scalp. I'm actually understanding where the market's going and I'm trying to catch the full daily move. This doesn't mean that I'm not going to be taking profits off like at the first target. This just means that I always leave the runner to the full TP. This is exactly what I did on my most recent trade, which I actually shared in the Telegram group. I do everything for you guys for completely free. So again, you guys just have to join the community. You guys have to be in the Telegram and join those free daily live streams. You'll learn everything you need to know. I post all the trade recaps on this YouTube channel as well. So if you guys do want to join and learn, you guys can do that completely free. Just hit the link down in the description and consider this episode me getting back into the Marky Makers ICT Bootcamp. I'm going to teach you guys everything you guys need to know about these concepts, more about how you can actually use each concept individually and creating a full system out of these concepts. Now, one of the best pieces of advice that I actually got when I was studying was that you don't need to learn everything. Here's a problem that a lot of traders have, including myself. Like, it took me 2 years before I was actually able to consistently start making money trading. And that's because I got analysis paralysis. I learned so much different concepts. And for a long time, I was sorting this information. I was getting rid of the stuff that I didn't need. And so I highly recommend to you guys, you find something that makes sense for you and create a system out of it. You don't need to learn everything. And if you do, it's not a bad thing necessarily, as long as it's all like in the same group of concepts. So like ICT concepts, they all work well together. You can adapt based off of whether it's giving you an IFEG, an FEG, a discount or premium. And so all of this stuff, it works together. If you're learning different strategies, however, like support resistance with ICT and trend lines, that right there, you're cooked. And you're going to, for a long time, be sorting that information out because you're going to jump between this and this and that. It doesn't actually work together like a puzzle. ICT concepts, all these concepts I'm teaching you, they work together like a puzzle. And that's why like every trade looks different for me. And yet I'm able to adapt to it because I know the different models. So that's what I want to leave you guys off with in episode 9, I believe. So this is going to be on the no wick candles. I hope you guys learned a little bit more about how you can use them. And with that being said, guys, I will catch you guys in the next episode of the Marky Maker Bootcamp. Peace.